In this video, traders, we're going to look at a stock that IPO'd a few years ago, but is now getting decimated. Where's it going to go now? Stay tuned. Hey guys, a very warm welcome to you. So, Footasylum is a stock that actually was IPO'd back in November 2017. Doesn't matter when you're watching this video, that's when the IPO was. And IPO'd around, I guess it's probably a 117 mark. All I've got here is the opening price, as you can see on the chart. And as we know, IPOs generally they open higher than the actual IPO price. But let's call it kind of 190 here just for the sake of it. Rallied up pretty good. And now, as you can see on this chart, two absolute horrible hammerings from earnings, and we're trading now down at 25p a share. So let's talk about Footasylum, let's talk about the business model, let's talk about some bear ideas and bullish ideas for the stock, and also not necessarily looking at just Footasylum itself, but this pattern repeats itself quite a lot with IPO stocks, so it's quite useful to think of it as a general kind of approach for IPO stocks anyway, regardless of whatever this company is doing whenever you're watching this video. Okay, so Footasylum was created or started by the founders of JD Sports. Now JD Sports is a big sportswear company in the UK. They're now expanding internationally. Founded a long time ago, but kind of built up from a market stall all the way up to kind of a massive FTSE 100 company. The founders sold that, IPO'd that a long time ago, went off, and they're out of it now, and it's chugging along, doing very, very well. They founded Footasylum, which is a similar model, right? So JD Sports, they do high-end. I say high-end. It's kind of fashion. They call it athleisure. So your Nike, your Adidas, those kind of the latest trainers that come out, JD Sports will have them. The latest apparel, the latest gym wear, the latest stuff from Under Armour, all those brands, JD Sports will have them, as opposed to some of perhaps other offerings, which are maybe last year's, like SportsDirect. They're changing slightly, a bit more now, but it used to be more lower end stuff, like cheaper brands, less fashionable brands, and perhaps older style trainers, but it was cheaper. But they're changing that model now. But anyway, JD has become known for that. So Footasylum, similar model, focused a lot on trainers, shoes, I guess using the contacts that these guys had already with the suppliers and with the brands. They started this up. Now, in the UK, you'll see, if you're walking down the street, kids who have JD Sports bags, and you'll see kids who have Footasylum bags, and they seem to wear these as if they're a kind of brand as these guys do, guys and girls do. So to me, this kind of known as a similar market. They've got similar products in, it's a similar demographic. It's that athleisure kind of. It's not going in there. You're not going there specifically looking perhaps for the best running shoe. You probably go to a specific running shop for that. You're going in there looking for the latest trainer that you want to wear on the street. So that's really what we're looking at here. So JD Sports, and let's just have a look, guys, just to compare it, because you know, we can see what's going on here. So JD Sports IPO'd, where you can see I've got some notes on here because I've been watching this one for quite a while. This one IPO'd a long time ago, and probably should flick it onto monthly, shouldn't we? Yeah, IPO back in 97, so, and it's shot up, you know, for 550, it's come back a little bit, but the market cap, just for reference, so we know where we are with this, the market cap is 3.3 billion, whereas Footasylum, the market cap at the moment is only 28 million. Now, this is the point. The interesting thing about Footasylum, guys, is they have warned us a couple of times. As you can see on this is earnings warnings twice in a row. They normally come in threes, people say, so who knows what's going to happen next. Maybe they'll do an update soon and we'll see what happens. But this is now relatively cheap, or very cheap company. And there's one or two things that can happen here. One is that it just disappears. Retail is struggling, high street is struggling. Unless they've got a strong kind of web platform, then they may well struggle. But at the moment, they're still expanding. They're still kind of pushing in international. And with a market cap of only that 26 million, you think, are they a target for a buyout? So who could buy them out? Well, the obvious one would be JD. I don't know whether this is possible, whether there might not be a reason why they can't do it. But for me, that kind of looks like, well, we can just get rid of our competitor just like that. We can spend 26 million right now, or maybe a bit more, and we can get rid of them. We can either keep them as Footasylum and put it under the JD brand, so we're making the money, or we can rebrand it as JD. Probably they wouldn't do that because the stores are next to each other, but that's a possibility. The other one, of course, is Mike Ashley, who owns SportsDirect International. He's been buying all sorts of retail companies at the moment, House of Fraser, Evans Cycles. Every week I look at the news and then Mike Ashley seems to support something else. So perhaps that's something he would look at. He's got a stake in Game Group as well. So perhaps something he could look at. He'd look at Footasylum and say, well, actually, this gets me kind of in with the higher level brand potentially. I could have that as a more of a premium offer, keep SportsDirect as the offer it is. Although he is, like I say, he is bringing more higher end brands in and more kind of up-to-date brands in and more of the up-to-date trainers in. So maybe that's the way he's pushing it. So who knows? But anyway, the point is, guys, this chart pattern is quite it's quite similar to a lot of IPO charts. You know, they start off really, really well, and kind of has to get a good roadshow, get a good investment, and then things just start slipping. A couple of earnings calls come out, a couple of earnings cycles, and they're not growing as much as they should be. And that's really what people have bought into. They're not bought into the profitability as such as the company. They've brought into the growth strategies and plans that have said, hey, we're making this now. We plan to expand to this, so we should make this. So really our valuation is a little bit more than it is now. That's really how companies are valued anyway, right? And when they come out and say, actually, you know what, that plan doesn't work, and in reality we're not made as much as we thought we'd done, not only does it take the cream off the top from the expected increase in earnings, but it actually decreases the value of the current thing. So not only does it come into question what they're going to do in 5-10 years time, it also comes into question the viability of the company. So these two earnings that we've had coming out have really hammered this kind of thing, and you see this quite a lot, gap down, gap down. Now, as I say, they say that earnings warnings come in threes, so maybe we're due one more, and then perhaps something will come out. But there is that kind of thing of, okay, well, if it's going to die, is it going to be a takeover target, or will someone just let it die and then they'll buy off the assets and the unit? That's potential. It's not a kind of clear cut thing. But at 26 million market cap, at the time I put this video out, that seems interesting to me. But of course, it's one of these things that either is just going to go. To me, it's a binary play, right? It's either going to disappear or it's going to be worth kind of 6 or 7 times in a couple of years' time. And it'll be interesting to see how it plays out. But the point is, the chart pattern is interesting, guys, because this happens quite a lot with stocks. So it's worth noting down and kind of making some kind of reference and notes and seeing how this plays out, even if you're not involved in it. Anyway, guys, let me know your thoughts in the comment section below. If you're from the UK, you're probably very familiar with Footasylum and JD. Let me know your thoughts. Are you a customer of them? What do you think about the brand specifically? I'm always interested in a bit of market research as well, see what you guys are thinking. Other than that, keep your risk managed. Take care. I'll see you in the next one. Bye-bye.